Good day, Ira Epstein of Linn & Associates with your metals market update, and this update is for Thursday, April 2nd, 2020, about 4:20 p.m., and that is Central Time. What a day in the metal markets. I mean, you talk about huge moves. You know, I thought volatility might have gotten away from the markets. Up 500 points in the Dow, didn't get away. You were down 1,000 yesterday, up 500 today. Just look at these moves. Nothing's gone away in terms of volatility. On the energy markets, absolutely nuts. 10% moves in one day. So these are big time plays that these markets are making, and we have to keep our eye on it. 11 cents in gasoline. So if you think gasoline was cheap before as it got down into that 58-cent zone, well, now you're suddenly back to the 72-cent area here. At the same time, the note market continues to fall. It was a strange day. The dollar up, the metals up, the stock market up, and yields down on everything. Very fascinating day. In the gold, you are still caught between the 1672.40 and the 1484.60. It's just whipsaws back and forth. This is typically this type of patterns where traders typically do well. This is not what you call doing well. That type of trade catches the guys that don't get short. They're buying on the way down, then they're selling on the way up. It gets rough. When we take a look at what the market's done, you could see these wild swings, and they're not through. What is through is the market seems to be forming a better base here in the terms of the market has some higher lows. But at the same time, on the overall pattern, you've got lower highs and a lower low on the shorter term. It's very, very hard market. What the market has done well is it's held the 18-day average of closes. However, as I said, that makes it still a difficult market because you've got the lower highs, lower lows into it, so you don't have a trend that's going with it. If the market were to soar again tomorrow, and let's assume it takes out 1673.60, that would negate the swing line downtrend, but it wouldn't do anything to put it into an uptrend. When we come over and we look at I'll come here to the Bollinger Bands, they're very far away. You got the one up here, you got the other one down there. They're not in play at all at this time. And momentum in the market, well, tomorrow when we reopen, if we open steady to higher, the way that I know how the stochastics work, I would expect them to get overbought, just like that. So the interesting part will be what this market does. Is it going to return and challenge the 18-day average again? Or is it just running to the upside? I'm lost on it. I rarely say that. I'm lost on it. When you come over to the gold versus silver, you can see how the market pulled back into that number. That means silver is gaining on gold at this point. And if you look at the silver chart, this is a chart that I think a lot of traders, me included in it, I was more bearish. I wasn't expecting today's action at all. I saw lower highs, lower lows. Yesterday, a confirmation of that. Momentum had flattened out, and today momentum took off again, and it flipped around the market. Now you have a lower low, higher high pattern, but you've got the bias turned to the upside and your momentum turned up. Even if you came back under 1389.50, it wouldn't restart a downtrend. So that's another market that knocked traders out today. Then we get to the copper, and the copper has been staying, and it's been staying under the 18-day average of closes since the very beginning of March. And while you're getting a rally and you had an outside day up today, you could be making a move towards that 226.60 level. And as I said, I've got my doubts that you're going to get under $2 again in a pound of copper. Even with the recession, I think the economies will start using copper again, and that's the one thing that's been missing. Copper's using it, and we'll see what, China's using copper, and they're half the production of the world, and eventually our COVID goes away, so does Europe's, and everybody starts producing. Japan and South Korea are over the peaks already, so that's an interesting play too. In the platinum market, the market held the 18-day average of closes. Today's high at 1734.90 did not take out the previous rally high. So if the bears are going to grab control, they have to push this market right down immediately and not let it get over, the 735 level. Did I say 17? It's 734.90 was the high. I'm reading an extra digit in there. Keep thinking of palladium. And where the market is right here, you don't want to take out 737.50. Bears neutralized because you closed over the 18-day average. They're back in play if you don't take out 737.50 and you get back under the 18-day average of closes. Now you have an outside day down in the palladium. In its own way, this is not bad action because we were talking yesterday that the market had gotten itself overbought, come up here, and now the question is what was next. Now the first support, it seems to be finding support at the 100-day average zone. If that gives ground, look for the 18-day average zone. In the dollar index, the dollar's still very much in an uptrend. You've got the higher lows, the higher highs. The market did not run today because of the shortage of dollars. The Fed's facilities seem to be fully operational and helping what this market wants. Want to remind you that I put out my special stock index report. If you want to look at it, just go to our website under the word research at the very top. You'll be able to get into the report from there. I'm Ira Epstein. You have a great day.